studio. We're starting with a newcomer to New York stock markets. Marcus.
Yes, we are indeed. We're talking about the Chinese social network Weibo. It had a pretty good first day of trading in New York. Its shares were up almost 20% at the close, and at one point they were up 41% during trading. So as I say, a pretty good first day there for Weibo stocks. They started trading on the Nasdaq at $17 a piece, which valued the company at $3.5 billion. Weibo is the 7th Chinese company to list in the United States this year, and there's more to come. Delano de Souza brings us more now on a firm that's relatively unknown in the West, but it's a household name in China.
It translates as microblog, and with Twitter's ban in China, Weibo has filled its void. The site boasts an average of 61 million users a day. In March alone, the company said it had over 143 million users versus an average of 241 million for Twitter. The company, soaring popularity with China's population with over 600 million online, has also hit some speed bumps. Growing social media regulation by Chinese authorities since September have forced users to switch to alternatives like WeChat, where posts can remain private. The company's revenues tripled to over 188 million versus 664 million for Twitter in 2013. Weibo's listing is seen as laying the groundwork for another Chinese tech IPO. Alibaba, the world's largest online retailer, looks set to list in the United States. The company boasts of 500 million users on its Taobao marketplace and is partly owned by Yahoo. It's expected to be the largest the tech industry has seen since Facebook went public in 2012. A record number of Chinese technology companies are expected to list in the United States this year.
Now, as we've been reporting in the past few hours, there's an agreement to de-escalate the crisis in Ukraine. There are still a few outstanding issues. Russia's President Vladimir Putin has set a one-month deadline for Ukraine to start paying its gas bill. Putin was speaking during a question-and-answer session on Russian television. He said Gazprom would demand upfront payments from Ukraine in May unless there's progress. The Russian state-owned energy giant says Ukraine owes it $2.2 billion for previous gas supplies.
We will wait a month. If in a month, in the next month, there won't be any payments, then in accordance with the contract, it will change to a prepayment system. What does that mean? Ukraine will have to pay us a month in advance, and we serve as much gas as they pay us for.
Okay, let's take a look at the latest stock market figures next. In the United States, the indices closed mixed. We did see a move higher earlier on the Ukraine agreement, but the focus was very much on earnings season, with Google and IBM coming out with disappointing profits. At the same time, we saw better than expected results from PepsiCo and also from the banking sector. We're going to take a closer look at that in just a moment. Let's first talk you through the European close, though. The Ukraine crisis put pressure on stocks earlier in Europe, but shares, they ended higher as the US opened up in positive territory. In terms of corporate earnings in Europe, Germany's SAP posted lower than expected quarterly profits, with the firm blaming a strong euro. Now, let's take a closer look at some of those earnings that we're watching for you, as it is earnings season, of course. Profits at the American bank Goldman Sachs slipped to under $2 billion in the first quarter. That's 11% less than during the January to March period in 2013, as the bank's bond trading slumped. Still, earnings were better than many analysts had expected, as revenues from investment banking in particular rose. Goldman's rival, Morgan Stanley, also reported better than expected quarterly results, earning $1.4 billion in the first quarter. Like Goldman Sachs, General Electric beat expectations while reporting a fall in quarterly profits. The American company earned $3 billion from January to March in comparison to $3.5 billion last year. Present worldwide, GE makes everything from aircraft engines to fridges, and it's widely seen as a bellwether. It says its European operations reported better than expected results in the first quarter. And drinks makers are feeling the pinch during a crackdown on corruption and lavish gift-giving in China. France's Rémy Cointreau says profits this year could fall as much as 40% as its cognac sales in China are slumping. Rémy's rival Diageo also saw its sales tumble in the Asia-Pacific region in the first quarter. The maker of Johnnie Walker whiskey and Smirnoff vodka reported a 19% fall in sales in the region. OK, that is the business news for now. It's back to you, Mark, for the rest of it.
Marcus Carson with the business. Thank you, as ever, very much indeed.